But it's 11:45 on the dot. You know what that means. It's time for us to get into today's WesBank how-to show. And today we're dedicating the show to all your questions. Rudolph Mahoney from WesBank have banked up all the best ones, and we're ready to give you a little bit more advice before you commit to a flashing new car and structure your car loan. So get ready to get schooled on vehicle finance. Rudolph, welcome back. Good to see you.
Morning. It's so nice to be back.
Lovely. All right, so let's get into it. The first question, right? The questions from the Metro FM fans are pretty tough, but we know that you'll be able to handle the sharp corners. Now, the first one is Livu Mafela posted a question on Facebook asking whether he should add his car to his home loan. Tell us what he should do, Rudolph.
Wowzers, that's a very good question. So it's actually a very risky thing, putting your car on your home loan. Firstly, the house, as you're paying off the loan over 20 years or so, the house will appreciate in value. So if you put a car on your home loan, you'll be paying off for the car over 10 or 20 years, but the car will be almost worth nothing at the end of that period. So you're paying longer for something, and then also because the loan is structured over a 20-year period, interest is calculated over 20 years. So you'll be paying a lot. You'll be paying 3 times the cash price of the car. And also, you know, human nature, people change their cars almost every 3 years. So if you'll be paying off for a car for over 20 years, but after 3 years you'd want to change the car. So technically you'll be then paying for 2 cars, because you're going to have to buy another car through a different finance mechanism when you want to change the car. So it's actually a very bad idea. And the same goes for taking out a personal loan to buy a car, because a personal loan is priced much higher than a traditional car finance. So it's advisable to use the right finance mechanism or product for to buy the correct product.
All right. So we covered the difference between a deposit and a balloon, and I remember a balloon payment. I remember this conversation very clearly. If you want the answer to this hashtag WesBank how to question, then tweet at WesBank now. Lebohangalo tweeted us to find out if a residual and a balloon payment are the same thing. She's a little confused in terms of those two terms.
Yeah, they're very much similar. Both of them is a large amount of the loan that gets deferred to the final payment of the transaction. But a balloon payment you find on an installment sale agreement, and once you've paid the balloon, either you've refinanced it or paid it cash, then the ownership of the car passes to you, the client. Okay, on a residual value, it's basically you find that on a lease or a rental agreement, and that amount, when that becomes due, you simply hand the car back to the ownership or to the financier. Ownership never passes to the client. So that's the difference and the similarities of a balloon payment and residual value.
Okay, well, Lebu, thank you very much for the question. We got another one that was posted on Facebook from Witwaro Mulifi, and he says, how do banks decide what interest rate to give?
So basically, when we assess an application, we will look at the individual's credit profile. So if you've got a good credit profile and you conduct your affairs well, then you will qualify for a better interest rate. But we also look at things like the amount that you're borrowing and what your disposable income is like, and if those two match up. We look at the kind of car that you want to buy, the age of the car, the price of the car, and then the structure of your finance agreement also plays a part. So we will look at over what term are you financing the deal, are you paying a deposit, and then other market conditions also affect, like for example the Reserve Bank increased the interest rates just last week. So then obviously everything will be priced up by the 25 basis points, and if you choose between a fixed or a linked interest rate, it will also then affect whether the interest rate that you get quoted.
All right, and we did speak about the interest rates only last week actually, and it seems to be quite a hot topic. So Lauren Lee tweeted us and says, why did my friend get a better interest rate than I did?
Yeah, so I guess the biggest driving factor is the individual's credit profile. Now, Bonang, I want to use an example. If you've got this dodgy friend of yours and he's always borrowing money and he's not known for paying loans on time and so on. So if you're gonna give that guy or borrow him some money, are you gonna charge him a high or a low interest rate?
High.
high, of course,
Yeah.
because you want to make sure you get some money back on it.
Exactly.
But your mom or your dad or your cousin or someone that you know who's
Yeah.
trustworthy, if you know that they pay their loans back, if you're going to borrow them some money,
Low.
then it's a low interest rate.